Good morning, fellow traders and investors and wannabe trading addicts. Welcome back to the channel once again. And today I'm very excited because I'm going to talk to you about the things that you have to avoid if you want to be a successful trader, or what are a trader's important traits, or what are the things that can kill your trading career, things that as a trader you have to avoid. First, let me thank you for watching my channel, and if you are new, subscribe and like and share so that I know that you are enjoying the video. And if you want me to talk about something, just let me know. Just like people ask me questions or email me, then I talk about it. And then I'm going to also talk about auctions, property auctions, what not to do in property auctions, or how I learned the proper way to buy property from auction. And I'll show you an example of an auction property. So, okay, let's head on. So, we've talked about trading, and in my view, the important trait of a trader is always patience, okay, and your mindset, which is psychology. This is about 70 or 80 or even 90%, and the rest is technical analysis. Because like I always say, the market always has two ways to go, okay? The market either goes up, okay, or the market always goes down. So when you are in the market, you are either buying or you are selling, or we have some kind of traders who do hedging, what hedge their position, which means they buy and they sell at the same time. Okay, so you have to know, and like I always say, trend is the basis of all profit. And this is what some people do, and they think they're trading, and it's not trading. Okay, let's take as for example, you have this market is Aussie dollar card. Okay, so they may for instance place a trade. Okay, forget about the alert. Okay, they may want to buy. Okay, so they may place a trade. Let's say in this case they place a buy trade, then the trade is going against them and they close it, then they'll go sell, then they are in loss and it's going against them and they close it, then they go buy and they close. What I find in my own experience, we kills or kill your account or bankrupt your account is cutting losses. So within a few minutes they've bought, close it in a loss, sell, close it in a loss. That is why you have to be very disciplined in your trading, because every trade that you want to trade, before you trade, you know your stop loss and you know your take profit. Even if you want to trail your profit, you have to know your stop loss. Stop loss is proper risk management. This is going to help you to protect your account. So therefore, let's say if you buy here, I'm not saying it's a buy trend, a demonstration, then you place your stop loss here. Okay, it means that you don't care if the market is going against you and is here, so you are in about this loss, 20 pip loss. You know that this is the risk that you are willing to take, so you allow the market to do its thing. But whereby you trading and you don't have any plan, it seems you don't know what you're doing, so you just gambling because you just place a buy and the market goes against you and you close it. then you place a sell and the market goes against you and you close it, and you buy and the market goes against you and you close it, and on and on and on. Before you finish, if you add the accumulated loss that you've cut, that means that's a hell one of a lot. And within a day or days, a matter of days, you're going to lose all the money in your account if it is real money. Okay, and you have to have patience, which is the biggest traits in the market. Okay, this is a daily chart, so each candle resembles or shows the whole day what happened. Then you can break down into smaller pieces and see the 4-hour chart. So this is today's candle here. Okay, this is today's candle here. So if you watch very closely, you can see there are two things. Okay, there are two things you can take from the daily chart, and I'm going to show you what these two things are. Okay, I'm going to show you what these two things are. So you can see every candle, every daily candle has this. Okay, you have yesterday candle, this was the opening, and yesterday candle, this, you see, this was the close here. That is the wick here. Let me put the trend line there so you can see what I'm talking about. Okay, that is the close. So the market opened and shot up all this way down and close here. Okay, and then every day that is what you have. You have an open and you have a close. Okay, you have an open. So the two things you can take, okay, from this is that for every day when the market opens, for every particular day, the market will form, okay, the market forms two things. Okay, you have a high which is H of the day, then you have a low which is L of the day. So these are the two things every day the market will do. When the market open, you have a high, okay, and you have a low. This, you have a high and you have the low, and this is very keen. So when the market forms the low of the day on this particular day here yesterday, which is this, you see it didn't go any lower, and when it also formed the high of the day, it didn't go any higher, it retraced and closed here. And the previous day on this day also the same. This is the low of the day and it rose as high as this, then it closed here and it's not there. So this is what I was talking about. If you are a day trader, how you look at the big picture of the market, then you break it, and which works for you, whether you want to use 1 hour trade chart or 4 hours to trade, then you know how to trade. Because as long as the market forms, assuming this is the low of the day, the market, and it says this is the low of the day, it doesn't go any lower. Okay, and if it's form high of the day, it doesn't go any higher. You can see from here it came all the way, this is high of the day, then it retraced and it dropped as low as this, then it closed here, and this is in between how you trade. So it's up to you to be patient when you are buying, and when you are selling also to be patient, because you need a good entry to make you money. This is why, if you watch the previous videos, I said trend is the basis of all profits. Okay, as you can see, a beautiful trend is the basis of all profit, and trend comes along as a result of time, and this is the virtue day traders don't have, because when you are day trading, you are just going in and out, in and out. So if you don't know what you're doing, it's easily to fall prey to losses or become a victim of losses, because you don't have the time. Whereas day traders or swing traders or long-term traders, okay, they have those time to ride all the trend. And also to make one weakness of the day trading is to make big money, you need to bet big. For instance, this is a downtrend which is about 60 let's say about 100 pips, or yeah, let's call it 170 pips. So if your lot size is 0.1, that is 170. So let's say if you want to make 1,000, probably, or close to 2,000, your lot size have to be okay, about 10, so that 100 pips will give you 1,000. But when you do a long-term trade, okay, or trend traders, you don't need to put big money in order to make big money, big lot size in order to make big lot size. Because look at that, this is about 2,000 pips. So even if your lot size is 0.1, with a little risk, you're making about 2,000 once you exit your trade. But here, your lot size is very big. That's if you want to make big money, which means even if your stop loss is 20 pips or 30 pips, it means that you're risking about 200 or 300. So this is important. That's why you need to know and understand what you're doing. Okay, and it's important also you get the right knowledge. The person who is teaching you should understand, know, and have time for you to answer your questions and take you through the market and explain everything for you. Once you can master these two things and learn how to technically analyze the market, have patience with your entry, avoid taking big losses and take big profits, this will be a game changer for you. And focus and learn and learn, and also keep your practice account, because one thing I find is that once somebody learn how to trade and they start live account, most people don't go on to their demo account again, and they don't practice. All they do is just you know their live account. This doesn't work that way. Trading is like mathematics. If you want to get better, you need to calculate, you need to solve equations. The more you solve, the better you become, the more experienced you become, and you learn from your mistakes after jotting them down, and make sure you don't repeat it. And every day, at least, this is what I reckon, spend at least an hour on your chart, not trading, but just analyzing it and study the market. When you study the market, you get to know the other blocks, because the market deals with two things: buy, sell, that is accumulation or distribution. And you know where the market maker puts the order blocks. The buy order blocks are accumulated, the sell order blocks, which is are distributed. They are waiting to distribute. So you know what to do. If you can avoid these things, this is going to help you a lot. There's no two way about it. You need to, this is the success, or this is the sacrifice that you have to pay as an entrepreneur. You have to spend those long hours, spending the time on your chart. If you can do that, I guarantee you, give yourself 3 months, give yourself 6 months, you're going to see how your trading is going to change. You know, things are going to change for you. And 3, or the last thing as a trader you don't want to do, is trade on emotion. When emotions are high, intelligence are low. This doesn't apply to only trading, it applies to all businesses. When we come to, I'll explain to you in Ocean, I'll explain to you everything that you want to do. Take emotions out of it. So when emotions are high, that's when intelligence are low. That is where you make the most mistakes. So if you are angry at your job, if you are angry with your wife, if you are angry at your children, or you are angry at something, or you have some emotional, there may be a loved one is in hospital or going through a difficult time and you emotional, close your computer, close your chat. Don't trade that day, because you can't make decisions, and money itself is emotional. You can't make fundamental decisions in the market based on emotions, or when you are emotional, your emotion is going to get the best out of you and you're going to lose. And that is where you stupidly also goes against the market. Oh, I have lost, so let me recover this money, and you keep betting big and you keep losing and losing and losing. When emotions are high, always remember intelligence is low. So you don't have to trade when you are emotional. The market is going to be there 300 years from now. After we are dead and gone, it's always going to be there. If you miss a trade today, if you miss trade setup today, tomorrow is there. If you miss the whole of this week, the whole of next week is going to be there. The whole of the other weeks are going to be there for you. So don't say I'm emotional, but I'm coming to you. You can't do that. Okay, even if it's worked for you before, remember, it's going to get to you. These are the biggest things that if you can change as a trader, as an investor, is going to work for you, and you begin to print your own money, because you don't need to trade all the markets, but if you analyze and study the markets, you can focus on just one market, just like I said the other day, and that is going to make you rich. Okay, that's going to make you rich. That's going to set you financially free. So understand this and practice it. Practice makes man perfect. Study, 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 study. So let me know what you think, and then we'll keep bringing practical things here. And okay, the same. Should I? Okay, no, I'll talk about this in the next video. How on my I'm at a mentorship, and I bought a challenge and I was doing, and because I wasn't focusing, I made a mistake, and then I was about 1,000 away from failing, because it's a 200k account. So how I came from 181k and back up to passing the challenge. So I'm going to talk about in the next video, and I'll show you everything, what happened and how I overcame. All is here, the mindset. Okay, and this is what I'm giving you, some real free valuable information here. So share the video and let me know. So okay, now let's talk about oceans. Okay, yeah, so you can see What are auction properties? So a person's or a property goes to auctions for two reasons: either it has been stolen or it has been confiscated from somebody who has been deemed to have acquired those properties or his wealth illegally, so they send it to auctions. Or two, a person who wants to sell his property decide not to use a estate agent or a realtor, so he gives the property to an auctioneer to auction. And remember, when a property goes to auctions, it has a reserve price, and there are so many people going to the auction room and they want to buy the same property, or at least so the auctioneer, because the higher the property price, the higher their fees, because you have to pay percentage of when your property is sold in auction. Okay, so for me, what do I do? What I'm saying is, don't go to auction. If yes, you can buy good property from auction, but don't go there. Do these two things: view the property and make an offer before the auction date. If the offer is not accepted, you tell them. If the property doesn't get sold, you buy it, or you make another offer after the auction is finished if the property is not sold. Why am I saying don't go into auctions? Well, remember what I said earlier: when emotions are high, intelligence are low. And when you are crammed, you have 1,000, 2,000, and also phone bidders. So for a particular property, there could be hundreds of people bidding for the same property. So that drives the price up way, 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 way above the price. Okay, so let's look at this. This is based in West End in Glasgow. A fabulous Georgian property. The opening bid is 293,000. Looking at it, it doesn't need much work done to it. And personally, if I should buy this property, I'll use it for service accommodation, like a mini hotel. Put it at Airbnb or put it on Booking.com, because of it's just right in Glasgow city center. So it will be good for people coming for holidays, or people, business people who are just coming to do business and looking for a nice place to stay and go. But the reason is, even though the open bid is 393, if I decide to buy this property, let's say I will submit my offer, because you can submit an offer before it goes, and if the offer is good, it will be accepted. Let's say if I decide to bid 320,000, this 320,000 is what I'm willing to offer. So I will submit that 320,000 before it finish, or it goes into the auction room, because now it's being sold, as you can see, online. But if it doesn't, if on this day it's not sold, people meet and bid for this. And when they meet, intelligence, emotions are very high, intelligence are low. The aim is to drive this property up to as high as possible. So if you have hundreds of people trying to buy this property, it could end up going for maybe 400, 500, 600, depending on how many people are interested in this. And maybe the real value of this property will be maybe 350, and this auction can surpass it. So in my view, there is no need to go and sit with a lot of people in auction room try to buy the property. Look at the lots that are being auctioned, see the one you're interested, arrange to view it and see if there is any work needing done on the property. If there is any work needing done on the property, you can get your tradesman to view, and you get estimate at least how much it will cost to fix. Then decide what is the best offer you can give. So if you decide what is the best offer you want to give, submit that offer before the real auction date. If it's accepted, fine. If it doesn't get accepted, no problem, leave it and look for other ones. Then when the auction is finished, that is the date they are doing the auction, is finished, let the people cram in the room, let them do their thing. When it's finished, check, was it sold? If it wasn't sold, make another offer. When you make offer, they will come back, they will accept it, and they will come back to you, or they might even call you and say, hey, you remember the property you made that 320 offer, it didn't sell, so are you still interested? Then you've got them by the gun, so you can even make a lower offer, because if it goes 3-4 times and it doesn't get sold, the owner might decide to reduce the price even further for you. So this is how you get your bargain. I believe we've shared a lot of interesting information this morning. The video is going to be uploaded. Thanks to everybody that have taken the time to view my channel, like my channel, share my channel. I'm glad you've done that, and hopefully we will catch up next week. And until then, have a lovely week and see you soon. Bye bye.